You ever wonder what is the best ETF out there? Which one generates the most income? Which one generates the most growth? What's the one that generates the most total return? Well, welcome back to the channel. I'm Doug, the retirement guy with all the monthly ETFs, and today I have a video for you. It's been taking some time to put together. The monthly paying top 10 ETFs. Now, I sat down with over 500 different ETFs and put all of this together with some criteria that I feel is what most people look for. The minimum of a 15% total return, no NAV erosion, and the fund had to be at least 12 months old or older. Well, after we broke it all down, we have our top 10 and we're going to share them with you today. Before I do, I got to put a shout out to all of our Patreon supporters and all our YouTube members. Thank you so much for supporting the channel. If you're not part of our community, if you're not part of the subscription, don't be afraid. Hit that subscribe button, hit that bell notification. You don't want to miss a single one of our videos. And if you can support the channel, don't be afraid. Join Patreon. It's free. Or you can become a member at YouTube. Let's get into today's video. So the screening criteria, to build the top 10 list, I used a clear objective criteria for these funds. First, the fund must be a monthly paying income generating fund. It had to be at least a minimum of 1 year since inception, and the strategy must have been transparent and accessible, available to everyone can see. Then the next one is the ETFs that historically showed at least a 5% growth and historically delivering a 15% total return during the review period. So that would mean we would have to have historically showing a 10% of income and a potential 5% growth. So to give us that total 15%. So let's take a look at who came and made the list. At number 10, we have IQQQ, the ProShares NASDAQ-100 High Income ETF. Now this one has this historic 10.33% yield on that distribution. It had a 5.66% growth for a total return of 15.99%. So it just cleared the bar on each and every one of our platforms. You look at the chart and you can see it had that April 2nd drop off. It had that November, so it's been acting kind of like every stock that's been out there. But the recovery onto it has been very impressive across the board. Now, IQQQ was launched in March 18th of 2024, so it made it over that 1 year mark. And it's a high income NASDAQ 100 strategy. It pays monthly income, has that 10% yield, that 5% growth, and it's a hybrid option income design. It's exposure to the major tech names. So this thing does that daily covered call index, and it tracks the NASDAQ 100 pursuing the daily covered call writing strategy. At number 9, it came in at KQQQ, the Kurv Technology Titans Select ETF. Now this one had a 10.72% yield and had a nice 7.05% growth for a total of 17.72% total return. Now again, I have to always clarify that this information is on the time that I made the video or that I downloaded the information to it. So these numbers can always change, but this ETF has an options enhanced technology exposure. It meets all the screening requirements, came in at number 9 of our 10th. It came out in July 22nd of 2024. And as I said, this one aims to achieve that generating income and pursuing capital appreciation by concentrating on large cap technical stocks. or derivatives, and that globally it's shifting its underlying essence to determined by the advisor's outlook of the growth and momentum. So they're keeping an eye. It's a heavily watched fund that's always keeping an eye on the future, what they see coming out. And when we look at the chart, you can see that April 2nd will always be the big drop off. And then how did it react in November, in the November market correction? And how is it coming out of December? And we see this fund doing fairly well. So let's take a look at number 8, TUGN, the STF Tactical Growth and Income ETF. Now, you probably haven't heard of this one, but TUGN, I did not know about it until I got to do more research onto it and find out more information to it. This thing came out in May 19th of 2022, so it was out there for a while. Historically, they have 11.23% yield, 7.89% total growth for a total return of 19.12%. Now, I looked at it and I said, yep, everything's same, drops off in April, but recovered, had a correction in November, and it recovered. So the fund, what this fund actually does, it mostly invests in target outcome asset allocations. So what does that really mean? Well, it's looking at who's going to perform, kind of looking futuristic, who's performing, who's going to continue performing. So this is going to be into the NVIDIA, it's pretty much going to be tech side of things, NVIDIA, Apple, Google, plus some other markets that they look at, say, hey, this is going to be a growth area, and they go and target the growth and income. They use a systematic income overlay, which enhances the portfolio's income through that strategic use of option strategies, and it has a monthly income distribution, so the regular monthly distribution potential across the board to meet those income needs. So this one was a very interesting piece, and it's been out there for such a long time already that it definitely had to make our chart, and the numbers all fit accordingly. Number 7, BIGY. I did not guess a YieldMax fund would make it to my list, but then when I looked and saw it was the Target 12 Big 50, and we just did a video on this one, that it just celebrated that 1-year birthday. So it made it underneath that cut. This one came out November 20th of 2024. And here's the thing with it. They're targeting a 12% return. That's their goal. And historically, this one hit 11.4% historical yield, 5.25% in growth. So it just barely made it over that mark for a total return of 16.65%. And you can see it has the April 2nd, has the November corrections. But the Target 12 strategy is an option strategy focused on a diverse package of 50 large cap U.S. equities. It's an income generation. It uses option strategies to enhance income from the underlying large stock caps. The selection criteria is focused on the 50's largest U.S. companies, and it paid that monthly income, and it always continuously has that potential of giving you that continuous income. So this was an impressive piece from YieldMax, even though they've struggled in this past few months here. So this one made the list as number 7. Now number 6. This is the Kurv Yield Premium Strategy for Google. This one here came in at 11.74%, but the total growth is what kind of threw me for a loop at 33.65% total growth. That gives us a total return of 45.39%. The 11% yield was I thought was very good, but when we looked at the total return, look at this thing has climbed. You don't see the April 2nd drop off. It's almost non-existent there. And we really didn't see the November correction. We actually see a November gains, one of the rare ones that I've saw. Now this fund came out on October 31st of 2023. So we're easily 2 years into this, and it's probably one of its best years yet. It's a single stock premium income ETF built around Google, are focusing on premium income generation. Income versus growth, strong income generator with exceptional growth potential. And we're seeing that this year. The key insight demonstrates how a single stock income strategy can behave differently from broader indexes. Despite having a lower yield than some competitors, GOP's strong performance showcases the diversity in income ETFs. Now we get into a new one again. There's so many ETFs out there, I can't be on top of all of them, but I wanted to make sure that we were able to show them all. This one came out on October 24th of 2019. And this is the HDLB, which is ETRACS 2 times high dividend, low volatility ETN. So this one's 11.70 yield with a 13.89% growth for a total return of 25.59%. We see the big April 2nd drop off. That was huge, but it has recovered, which was impressive all the way through. So what this fund really does, and it's an exchange traded note that mostly invests in large cap equities. The fund tracks 2 times leverage exposure to that index, compounded monthly, of 40 stocks that have been cured into the list of the 1,000 largest U.S. firms based on high dividends with low volatility. So they're trying to work with a low volatility side of it. They use a leveraged ETN with historical high monthly income, and it displays that positive NAV stability with over 13% growth. At number 4, DYLG, the Global X Dow 30 Covered Call Growth in ETF. This one, 16.12% yield with a nice 7.01% growth for a 23.13% total return. This one acts like a normal ETF, the April 2nd, the November correction, but has come out of it every time very strong. It's a blue chip Dow exposure. It's partially a covered call strategy, and it's balanced between equity and call writing. So this one partially covered call strategy, and it's a balance between the equity exposure and the call writing, places it high on the list. So the other big thing that it does at the money call. So I'll back up a little bit. It does sells 1 month out at the money call index and has 50% of the value underlying in the portfolio. So it's really only working with 50% of the value to generate those covered calls, while the rest of the money is designed to develop over a period of time. At number 3, GLDI, the UBS ETRACS Gold Covered Call. Now this is another ETN. Has a 16.22% yield, a 13.12% growth, and 29.34% total return. So this one's linked to the gold assets. It's a commodity exposure, different from traditional equities. It's a covered call strategy. It generates the income through those call writing options, and it generates that monthly income from those covered calls. Now this one is based on the credit sushi, I know I said that wrong, but NASDAQ Gold Flow 103 Index. The fund offers returns in covered call strategies compared to the shares of the ETF GLD. So this one has done a very strong total package with a good yield, with a nice growth. Now this one came out on February 2nd of 2013. So again, we have almost 12 years under a belt on this one. Okay, now we're getting into the top 2. And this was a tough one to pick which one to go with, but QYLG, the Global X NASDAQ-100 Covered Call Growth ETF. This one with a 24.01% yield and a total growth of 7.45% for a total return of 31.46%. This one shows both the April 2nd and the November correction. It launched in September 18th of 2020. So we have a little over 5 years under the belt on this fund. And this is why we put the performance down below. You will see this includes dividends plus growth across the board. At 5 years, it's at 11.63%. Since inception, 13.52%. And 1 year, 14.27. So this has really been a very strong year for QYLG. The balanced approach between the growth participation and the income generating from the NASDAQ-100. This one historically posts over a 24% yield with a 7% return within the reviewed period. It writes call options on 50% of the holdings, allowing partial upside capture. So those 50-50 blends that we see, you can see the performance that you get from something in this package. So this is a balanced income generation with the growth potential. And at number 1, SLVO. This is USB's ETRACS Silver Covered Call ETN. Historically at 19.46%, a total return of 35.97%, for a total return of 55.43%. Now this is a silver linked covered call ETN paying monthly income. Historically produces over 16% yield with around 13% total gain over the period that we looked at. The commodities behave differently than equities, making SBL a unique income style ETF. This one launched April 16th of 2013. And again, because we had so much time that we could put into it, we show you all the year, 5 year, 10 years, and since inception. And with silver being on such a demand, it gives us another option to put in a portfolio. So the key takeaways, I threw them on the board here so you can see everything all at one time. Across the board, our top 10 came in with an average of 14.29% yield and an average growth of 13.69% for a total average return of 27.98%. So this could easily make a very nice portfolio using just these 10 funds, because it does have a nice mixture between it. We got the Dow, we got gold, we got silver, we got technology, we got the NASDAQ. The one thing I was shocked at, we didn't really have anything really in the S&P 500 category. Some of it could be that they were under that 1 year, some of it that they just couldn't hit the 10% part of it. But overall, these are the top 10 that I found out of the 500 that we went through. So when you look at it across the board, you see a lot of 11%, and then we get into the bigger 16 and 19 and 24% categories. But I have said this many times, total return is the story. It's not chasing yield. It's not really even chasing growth. It's total return tells you the real story across the board. And when we did that and we looked easily across the world with total returns, I like that I saw that big average of 27%. And each fund has a particular purpose and a particular reason. So what really gets into it is that it could fit, any one of these could fit in a portfolio if it fits what your strategy is. So I highly recommend that you always do your own research, do your own what's your own risk factor, know the stock inside and out before you invest into it. But as you can see, every one of these is giving you a strong yield, but then there's some that'll give you strong yield and growth. What is it that you're looking for? So the key takeaways is yield and growth balance. Some monthly income ETFs show strong yields and growth at the same time, which may surprise many investors in today's market. The NAV behavior matters. Yield alone doesn't tell the story. NAV erosion or stability is equally important to long-term returns. That's why I always say total returns is what you have to look at. The strategy, covered call, premium and income strategies, it's a wide variety and a wide across all issuers. So you have to understand what's good and bad. What is it that you like in a cover call or you don't like in a premium in call, or vice versa. And past performance. Past performance helps with analysis, but does not predict the future results. So always do your research in ETFs. Look for as long as you can go out as you possibly can. And don't just think past performance does not guarantee future results. I can say that so many times, but you got to understand what's going on. Let me know your thoughts. Let me know what you think of these top 10 lists. Did you hear of every one of these? Have you ever invested in any of these? Let me know in the comments below. I'd love to hear from you. And maybe we missed one off the list. I'd love to hear if we missed one. Let us know.
Thank you for watching. Press the like button, hit the subscribe button, and join. Leave any comments